Okay, friends. So we will continue with this session. In the previous session, we stopped with question number 3 in the exercise section. So now we need to take question number 4. You can take page number 10.36. In page number 10.36, you can read question number 4. Okay, bookmark LLP. Okay, so we will read the question. What is given in the question? It's a very similar problem to what we did in the previous one. So Bookmark LLP is a publishing firm that has started operations very recently. The firm has published Advanced Learners Dictionary this first year that have been sold to 3 distributors, PER, MGH and WLY. These are the name of the distributors to whom the dictionary has been sold. The firm's financials reflect profits in the first year of operations. The management is pleased with the results. However, they are interested in finding out how profitable each customer is. This would help them formulate their sales strategy. Okay, so there is a company, and the name of that company is what? Bookmark LLP. And what does this Bookmark LLP does? Bookmark LLP is a publishing firm which has published Advanced Learners Dictionary, which has published a book in the name of Advanced Publishing Dictionary, Advanced Learners Dictionary. Learners Dictionary. Okay, now this is sold to 3 customers. Okay, which are the those customers? PER, then MGH and WLY. These are the customers. Then in the first year of operation itself, the company has turned out to be a profit making company. The management is quite pleased with the results. However, the management wants to know, out of these 3 customers, which customer is the most profitable, or how each customer is profitable. Okay, so the management wants to find out the profitability customer wise. They have already found out the overall profitability, and they found that the company is profit making, so they are happy with that, but they want to know customer wise profitability. Clear, that is a requirement. Now you have certain informations. What all informations do we have? Sales units per annum for each 3 customers, sales price is given, payment terms 3 by 10 net 30, then net 30, 3 by 10 net 30. What do you mean by this 3 by 10 net 30? What does it mean? This is a normal way of denoting discounts available on prompt payment. Okay, normal credit period available is 30 days. Okay, this represents the normal credit period. That means if this customer purchases the particular product or dictionary, it has to make payment within 30 days. No further credit after 30 days. Up to 30 days, there is credit. But if the customer wants to make a prompt payment, there is an incentive. What is the incentive? If the customer wants to make payment within 10 days, within 10 days, then he is eligible for a discount of 3%. Is it clear? So 3% discount if paid in 10 days, else the payment has to be made in 30 days. So somebody tells you 5 by 5 net 20. What does it mean? It means that the credit period or normal credit period is 20 days. That means the party has to make the payment within 20 days at any cost. But if the party is making the payment in 5 days, then it is eligible for 5% discount. Is it clear? You have to be very careful about this notation, because in problems also they may show this notation and you should understand this is the meaning of that particular notation. Okay, so this is 3 by 10 net 30. That is how you pronounce it also. Okay, fine. So what is given here? These three customers, they are given credit terms also, and the percentage of sales returns, that is also available. Then delivery terms, FOB destination, and FOB shipping point. What does it mean? FOB destination means the price what is quoted is inclusive of the transportation cost. In other words, FOB destination means the delivery will be done by whom? The seller. Whereas FOB shipping point means what? The duty of the seller is over the moment the goods are carried over to the customer at the shipping point. Okay, so here no delivery. Okay, in the first two cases, FOB destination, there is delivery involved. Is it clear? Okay, so that is how the terms are. Now, in order to get the market share, PER and WLY has been extended credit terms to avail discount if payment is made within 10 days. Yes, that is what is given. So what the company wants to do, the company wanted higher market share. So to get higher market share, what they did, apart from the normal credit period of 30 days, it extended some discount incentive or discount facility for two customers. Who are those customers? PER and WLY. And what was that discount terms? If payment is made within 10 days, then 3% discount. Is it clear? 3% discount if the payment is made within 10 days. Now, the customer MGH does not have any much bargaining power, hence has been allowed only 30 days credit period without any benefit of availing the discount. So there is no credit for this particular customer. Now, going forward, both P and WLY have made the payments within 10 days to avail the discount extended. So what happened? Both WLY and PER, they have availed discount. Okay, so they all paid the full amount in 10 days and they got the discount also. Is it clear? Yes. Now, what next? On the cost front, variable cost of goods sold attributable to net sales to the customers, PER, MGH and WLY are 1,50,000, 1,42,500 and 187,500 respectively. That is the total variable cost. Key metrics of customer assignable marketing, administrative and distribution costs are as under. You are given some information regarding the marketing cost, administrative cost and distribution cost, which needs to be assigned to the customers individually. Okay, so this is the our overhead portion which needs to be allocated to the customers. Okay, what all are the overheads? Order taking and processing, then expedited rush orders, then delivery cost, sales return processing, billing cost, customer visit and inventory carrying cost. And there is one not for inventory carrying cost, that is assume no opening and closing stock. Fixed costs that are not assignable to any customer is rupees 1 lakh per annum. Okay, now what is the requirement? Prepare the customer wise profitability statement as also the overall profitability statement of Bookmark LLP. So both customer wise profitability statement as well as overall profitability statement of Bookmark recommend a strategy for Bookmark LLP regarding its customers. Okay, so you need to give a recommendation also. Is it clear? Okay, now okay, so first we can start answering the problem. First you have to start with the customer wise profitability statement. Okay, for that first you need to do the revenue analysis. Okay, so you can write revenue analysis customer wise. Okay, how many customers do we have? We have three customers: PER, MGH, and WLY. PER, MGH, WLY. Sales. Okay, what is sales? I will give in numbers. Sale numbers. 1,950 and 1,250. 1,950 and 1,250. Okay, then what do you have to do? You have the gross price. There is no quantity discount. Okay, so initially if the entire sales revenue was at 250 per unit, it's only the cash discount what happens later. This is only cash discount, so the revenue will be gross revenue. Okay, so selling price per unit is 250. Yes, 250. Sales revenue gross 2,50,000. Then 950 into 250, that will be 2,37,500. Okay, then next 1,250 into 250 will be 3,12,500. 3,12,500. So you can include one more column. Total how much? 250 plus 237.5 plus 312.5, that is 8 lakhs, and all figures in rupees. Okay, so this is the gross sales revenue. Now what you have to do? Less, there is sales returns, am I right? Sales returns 0.5, 0 and 10%. Sales returns, what is the sales return in the case of PER? 0.5%. Okay, so 0.5%, that is equal to 2,50,000 into 0.5% is 1,250. Then here nil, and in the third case it is 10%. So 31,250. Okay, so total will be 31,250 plus 1,250 will be 32,500. 32,500. So this will be net sales. Two lakh 48,750, and this is 237,500. Then 312,500. 312,500 minus 31,250. That will be 281,250. Okay, 281,250, and this will be 7,67,500. Now comes what? The discount. Cash discount. Okay, what was the discount terms? 3% discount was given to PER and WLY on prompt payment, and both of them accepted that. Okay, so that's 3%. Okay, 3% on which amount? On the net sales. Because gross sales, no need to compute the discount. Okay, so 248,750 into 3%. That is 7462. Here no discount. 281 250 into 3% will be 8437 or 8438. When you round it off, 746 plus 843, total will be 5900. Okay, so net sales revenue. Net sales collection. Okay, after cash discount, how much it will be? 241 288. This is 237 500, and here it is 272 812. So total will be 751 600. Then percentage of collection to original sales value. Okay, how much percentage of this net collection came with respect to the original sales value? 241 288 out of 250 comes to 96.51. Then this is 100%. 237 500 of 237. 272 812 on 250 will give you 272 812 on 3,12,500. Okay. 87.29 or 87.3. Here it will be 751 600 on 8 lakh. 93.9. Okay. Now what do you have to do? This is the revenue analysis. Now you will have to allocate the various overheads cost to each of the customers. Okay. So working note number 2. Allocation of overheads to various customers. Okay, now here again you have 3 customers: PER, MGH, WLY, and total. Okay, first one is order taking and processing. What is the rate they are saying? 300 per order. Okay, so 4 to 15. $1,200, 600, 4,500. Total will be 6,300. Now after order, it is expedited or rush orders. Expedited or rush orders means what? that emergency orders. Okay, what is the rate? They say 250 per order. What is the quantity? 105. Next is delivery cost. Delivery cost, how do they say? It is rupees 80 per kilometer. Kilometer run. In the first case, it is 150. Four hundred. That is 12,000. Then what else you have? You have sales. Next is sales return processing. Sales return processing is 108. Thousand three fifty. Next is billing cost. Billing cost, they say it is based on number of invoices at 50 per invoice. For 250. $7,000, 750. And 050. That is billing cost. Next is customer visit. What is the cost in the customer visit? 800 per visit. One. Then nil 5. 4,800. Then inventory carrying cost. Rupees 10. 1,950, 1,250. $12,500. 32,000. Okay, this is how you apportion. Now what you have to do? You can prepare the customer profitability statement. Okay, so next, customer profitability statement. What is the customer profitability statement? How do you prepare? Same format, PER, MGH, WLY, total. Okay, net sale proceeds 241, 288, 237, 500, 272, 812, and 751, 600. Okay, now variable cost of goods sold. It will be 1,50,000, then 1,42,500, then you have 187,500, then 4,80,000. Okay, this is directly given. Total is 4,80,000. Now, net margin 241, 288 minus 1,50,000. 237,500 minus 142,500, 95,000. Then 278,812 minus 187,500. 751,600 minus 4,80,000. 271,600. 271,600. Okay, plus overheads apportioned, we have to take one by one. Okay, order taking and processing. It will be 1,000, 200, 600, 4,500, 6,300. Okay, then sales return processing. Sales return processing 150, nil, 1,200, 1,350. Billing cost 200, then 100, 750. 100, 750, 1050. Customer visit. Customer visit 800, then 4,000, that is 4,800. Then total. So what I'm doing is I'm taking it one by one. Then expedited or rush orders. Rush orders 250, nil, 1,250, that is 1,500. Delivery cost 8,000, 4,000, nil, that is 12,000. Then inventory carrying cost. Inventory carrying cost 10,000, 9,500, 12,500, 32,000. Okay, then total cost. Total overheads apportioned. Okay, if you see the total, it will be 170,600, 1,56,700, 211,700, and this will be 5,39,000. Now there is one more cost, less overheads not apportioned. There is one lakh rupees which cannot be apportioned, so you are reducing it here. So net will be net profit. From the customer, it is 7688, 80, 800, 61, 112, 112, 600. So profit percentage to the sales value, to the sales value. Okay, so sales value, I'll be taking net sales. $34. Okay, so that is the customer profitability analysis. Now what is the question? The first part is over, customer wise profitability and also overall profitability statement of bookmark. So what you can write? The profit from the customers, PER, MGH and WLY, are rupees 70,688, comma, rupees 80,800, comma, and rupees respectively. Also the total profit of the company is rupees 112,600. Okay, and this 112,600 is after allocating the non-allocable, after reducing the non-allocable expense from the company. It's coming. Okay, so that is the profitability of the customers and that of the company. Now what is the next sub question? Recommend a strategy for Bookmark LLP regarding its customers. Okay, now for that you have to do some analysis. We have how many customers? 3 customers. They are PER, NGH, WLY and total. Okay, total sales volume. What is the total sales volume? Total sales volume 1000, 950, 1250. 1000, 950, 1250. Okay, 1000. This is 3200. Percentage of volume. Percentage of volume. Okay. This is before discount or before return. Okay, then 950 and 3250, 3200, 29.68, 1250 on 3200, 39.06%. This is this one. Then percentage of sales return. What is the percentage of sales return? Sales return percentage is, we have done the calculation here, 0.5 and 10. Then discount given is 3%. Then here also 3%. Okay, so profit. What is the customer wise profit? Customer wise profit is 7688, 8800, 61 112. 7688 plus 8800 plus 61 11, 61 112. Now what you can do? Percentage of profit to total. Total profit. Okay, 7688 on 212600, 33.24%. 8800 divided by 212600, 38%. Then 61112 on 212600, 28%. Okay, now profit per unit sold before discount, before returns, not before discount, before returns. 7688, 7688 divided by 1000, that is 70.68 per unit. And here 800 divided by 950, 800 divided by 950 will give you 85.02 per unit. Then next 61112 divided by 1250, 116. 48.88 per unit. Then 212600 divided by 3200. Okay, so this much analysis has been done. Now you can draw conclusions out of this. What are the conclusions you can take here? Here, if you see the customer-wise profitability, from the perspective of volume, WLY is having the highest volume of 40%, 39.06%, and lowest volume is contributed by whom? MGH, 29%. Okay. Now, if you come to the discount policy, the discount of cash discount is option for cash discount is is given only to PER and WLY. Okay, PR is given 3% and WLY is also given 3%. Why they are given? Because they are the persons who are contributing maximum volumes. WLY is contributing 39% and here they are contributing 31. So 39 plus 31, 70% it's contributed by them, more or less 70%. So they are given the discount facility, whereas MGH is not given any facility for the discount. Okay, now while coming to the profit, who is contributing maximum profit? MGH is contributing the maximum or highest profit. So the customer who has lowest volume of sales and who has not been given the discount, okay, because he doesn't have any bargaining power, is the highest profitable or the biggest profitable customer for the company. That is the major observation. So here is the profit, and this party, which constitutes only 29% of the total sales, is contributing 38% of the total profit, whereas WLY, though it constitutes 39% of the total volume, it is contributing only 28% of the total profits. Okay, so which needs to be analyzed. And in case of PER, it is contributing to 31% of the total sales volume and 33% of the total profit, which is matching. Okay, and while you come to the profit per unit, in the case of WLY, it is very low at 48.88, whereas MGH is providing 85.02, which is almost double or 175% of what? 175% of the profit given by WLY. Okay, so the customer priorities have to be changed and appropriate decision have to be taken. Okay, now what are the observations you can write here? One, by volume size, WLY contributes the maximum volume of sales at 39.06% followed by PER at 31.25%. Okay, the company has prioritized WLY and PER as the biggest customers and offered 3% cash discount incentive for prompt payment. MGH contributing only 29% total sales volume was completely neglected and did not offer any sales discount. However, from the net profit perspective, MGH is the highest contributor contributing how much percentage of total profit? 38% of total profit, contributing 38% of total profit, followed by PER at 33%, right? 33.24, and the least by WLY at how much? WLY contribute 28%. Okay, this analysis shows the need to revisit the priorities of the entity. The entity should recognize the fact that the highest that MGH is the highest contributor, is the most profitable customer, and hence should be given the highest priority in terms of cash discount, etc. Okay, similarly, Similarly, MGH does not return any sales, thereby increasing the profitability of the company. Okay, so this is the first point. Then the second point. What is the second point? Can you make any other uh, observations from this? Any other observations? Okay. Now, why WLY continues to be the least profit making customer, irrespective of the highest volume? Okay, there are two factors to it. One, high percentage of sales returns at 10% of gross sales. See what's happening with WLV. WLY is returning 10% of the gross sales, which is a huge amount. Whereas MGH, which is the most profitable customer, they are not returning anything. Okay, so since they are not returning anything, they becomes the highest profitable customer. Whereas in the case of the other party, they are what is happening? They are returning 10% of the gross sales. Okay, then second reason, if you see the question, you can find that. Okay, if you see the activity drivers and consumption, in the case of WLY, you can see order taking. Who is having maximum orders? WLY. Then expedited rush orders. Who is having maximum? WLY. Then delivery cost. They are not taking any delivery. It is FOB on shipment. Okay. Then sales return processing 8 here maximum. Billing cost 15 maximum. Customer visit 5 maximum. Okay, so in terms of the overheads, the maximum consumption of the cost drivers is by whom? Is by WLY. Okay, so all this translates to higher cost of serving WLY, which reduces the profit per unit of that WLY. Okay, that is the second reason. Okay, second reason, to WLY being the biggest customer in terms of volume.